Hello, good morning everyone. I'm Amy Lei, a stock trainer at Homely Chart Company, which is a stock training school. Welcome into today's video. It's the 41st of my channel, Amy Stock Analysis. And topic for today is about DXY and Nasdaq split to make profit. Okay, so above you can see that this chart is the chart for Nasdaq, the US stock index Nasdaq, right? And then below the chart is the US dollar index DXY. Okay, you can see very clearly this is around 20th March. After that, we see the price for Nasdaq just keep going up all the time, but for our US dollar index, ever since that time, it keep dropping all the time until now. So this is a split between the stock market and the US dollar index, right? Okay, so I'm going to talk about how we can make profit via this split. Okay, before we begin, I need to remind you that all the stocks mentioned in the video are for the purpose of demonstration and education, not recommendation. Investors should be aware of the risks involved in stock trading and take full responsibilities for their own tradings. Contents for today. Firstly, I will talk about reunions and splits between the DXY and the US stock market indexes, which mainly will be about the Nasdaq. So Nasdaq is quite representative for the US stock market, right? Okay, and then second part, I will talk about how to catch opportunities of gold stocks. And thirdly, latest market hotspot is about the big plunge for Wilmar. Okay, so about the split between the US dollar index, DXY, and Nasdaq. So why we have such a split? You know the reason why? It's mainly related with the US Federal Reserve's interest rate cut. How can it in fact influence the DXY and Nasdaq in different ways? Firstly, for the stock market, usually when there is interest rate cut, more money would flow into the stock market. Why? Because when the interest is low, usually the bonds become less attractive. Money would flow from the bonds to stock market. And then secondly, when the interest rate is low, the investors would have more money to invest. So that's why more money would flow into the stock market. And actually, the third reason is the US stock market is regarded as the most attractive one with the biggest opportunities. So investors all over the world, they would trade US stock market. So especially when during the COVID-19 period, a lot of people lose their jobs. They on the other hand, they want to make profit, right? They want to earn money. How to make money? Buy stocks. Yeah, so that's why more and more money flow into the stock market. During the COVID-19 period, although the economy is seriously damaged by the virus, but still the stock market keep going up all the time because the money keeps flowing in all the time. That's the reason why the stock market didn't really reflect the reality of the economy. Yeah, and then for the US dollar index, if there is interest rate cut, then the US dollar would depreciate. Why it would depreciate? Because when there is interest rate cut, then the inflation rate will become higher. Inflation rate rise, naturally the US dollar depreciate. And then secondly, as the interest rate continue dropping or continue to be cut to a very low level. Currently, it's near zero, right? So people begin to lose confidence in the U.S. dollar. So that's why the U.S. dollar would depreciate, would drop. Okay, when there is interest rate cut, you check the long-term history. Every time the U.S. Fed a cut interest rate, U.S. dollar would drop. Price for U.S. dollar would drop. That's the regularity. Okay, and we can check some details. This is the interest rate for the interest rate for of the U.S. and we can see that on 4th March 2020, the Federal Reserve cut the interest rate significantly to 1.09% from previously 1.59%. It's a 50 basic points cut. It's a very big cut. And soon after that, on 17th March 2020, the interest rate cut was further cut to be 0.25%. So it's already very low. And what's more, after that, there is further cut to be as low as near zero. And this near zero situation has remained until now, right? Currently, it's 0.09%. It's near zero. So in March, this is the very significant interest rate cut, and that's why we see the U.S. dollar after 20th March a drop sharply. Check this chart. This is the chart for U.S. dollar index and also Nasdaq, and check the date. 19th March 2020. After that, the U.S. dollar index is just keep dropping all the time until now, right? And on the same day, the U.S. stock market Nasdaq hit the bottom and begin to turn upward and keep going up all the time, right? So the reason is because the U.S. Federal Reserve significant interest rate cut twice in 1 month, and that's why we have such a split between the U.S. dollar index and Nasdaq. Okay, but we know that for the stock market Nasdaq, the big correction, the crash began on 20th February 2020, right? So the reason we know that the first case confirmed in U.S. is on 21st January 2020. The first COVID-19 case confirmed. That's in January 21st. But then it began to spread at a very fast speed, and then 26th February, so we have the first case of suspected local transmission. Soon the Washington and several other states report their own community transmissions. So people began to panic. That's why after February 20th, the market just keep dropping all the time until March the 19th, when Federal Reserve gave us the significant interest rate cut, right? So that's for the stock market Nasdaq. And then for the US dollar index, we see that also after 20th February, a drop first, and then drop, and then it's understandable. But after that, what's a little bit strange is we see that from 9th March 2020 to 19th March 2020, then the price for US dollar index actually rebound, and it's a very forceful rebound. So this is not easy to understand, because we know that March, the US Federal Reserve began to cut the interest rate dramatically, right? So the first cut is dramatic cut is 4th March. So why after the interest rate cut, then the US dollar index it turned upward and begin to give us a very forceful rebound. Why? Because just now we mentioned, usually if this interest rate cut, then the US dollar index would drop. So then this rebound is not easy to understand, right? But actually there is a reason. The reason is because influenced by the COVID-19, people realize that this is a very serious problem and people panicked, right? So in such kind of times of trouble, so all sorts of companies and institutions and investors, they want to hold the US dollar. Why? Because it's the world's reserve currency and it's considered the safest. So means what? The demand for US dollar suddenly surged because of the panic over the COVID-19 pandemic. Yeah, so that's why there is such a surge. Demand suddenly surged. Then the price, of course, would surge correspondingly. And of course, the U.S. Government would not just let the price keep going up all the time. They would curb the too fast rise, right? So then quickly policies are taken, such as the swap lines provided by the Federal Reserve, and also in March the sharp interest rate cut, right, also began to work after 19th March 2020. So that's why we see March 19th 2020 is a high. The price drop all the time until now, right? Yeah. So that's how we can understand this abnormal rally or forceful rebound between 9th March and 19th March 2020. Okay. And then secondly, I want to talk about why the split between the US dollar index and the Nasdaq is a chance for the stock players to make profit. Because we know that the relation between the US dollar index and the gold, usually they are natural enemies. US dollar and gold, they are natural enemies. Because before the US dollar become the world become the world's reserve currency, actually gold plays the role, right? And after the Second World War, the US dollar has replaced gold as the world's reserve currency. But if the US dollar become weak, then the gold will become stronger and threatens to retake its role as the world reserve currency, right? So US dollar and gold, natural enemies to each other. If one is weak, the other is strong, turns strong. If one is strong, the other turns weak. Okay, so when the US dollar index drop, then the gold price would rise. And what if we don't buy gold? If you don't buy gold, so actually you can try some gold stocks, right? Okay, so about gold stocks. So for Singapore, we have this gold stock called 5TP, right? CNMC Gold Mine. So this is the Singapore market, and by how can we catch the opportunity? Okay, so at the bottom, actually, can you see the blue candle? We have two blue candles here. This was covered by the white circle here, but there is a blue candle. This blue candle is called Tai Chi signal, and it's called a blue Tai Chi function, bottom catch. And then actually at the top we have another yellow candle. This is called a yellow Tai Chi. Okay, so yellow Tai Chi means top escape. So bottom catch, blue candle, top escape, yellow candle. These two colored candles are called Tai Chi signal. Okay, and then so at the bottom you can catch the opportunity by checking the blue Tai Chi signal. Once the close price successfully stand above the high of the blue Tai Chi, it's supposed to be a bottom catch buy point. Meanwhile, if you check the circles, what's the purpose for the circles? The circles is a short-term buy and sell signal. First, the red circle is the buy point. First, the white circle is the sell point. If it's in red circle, means it's for short-term uptrend. If it's white circle, short-term is in downtrend. And then we see that after we have the Tai Chi, we also have the first red circle here, right? So first red circle is the buy point, but we don't buy immediately. We wait for the confirmation. The confirmation is the price after the first red circle, I mean the close price. The close price after the first red circle can stand above the high price of the first red circle candle, which means this candle, right? So this is the first candle that the close price higher than the first red circle candle here, right? It's very clear. So this is the confirmation. So it's the safest to buy here. And meanwhile, we need to combine with a fund indicator. So because we know that money flow is the most reliable thing in the stock market, so we always need a money flow indicator, fund indicator. So this deviation expert can tell us the money inflow and outflow, and it's the net amount of the inflow or outflow. If it's red, means that the net amount is inflow. If it's green, means that the net amount is outflow. So if we see that when we have the confirmed buy points, the money already flowing in for a while, means it's quite safe to buy for short term. So this is a very good buy point. We see when we have the first red circle, money already begin to flow in. So that's a very good sign. But we need to wait for the confirmation, which is here. Buy, and then we sell when we have the first white circle. This is the short-term sell point. So we buy, we sell. And then for this time, we buy and we sell. This time, very limited profit or no profit at all. But remember, what we are pursuing is not 100% accuracy rate. We are pursuing high success rate and also great profit and small loss. That's what we are really pursuing. This time doesn't make a lot of profit, doesn't matter. How about this time and this time you can make profit? Then you can avoid the risks. That's good enough. Okay, so yeah, this time no profit. And how about this time? The buy point is not confirmed, right? So we don't need to buy. And for this time, buy point confirmed. This is the candle when the close price above the high of the first red circle candle. So buy and we sell. And then another buy point here. Check the money flow. When we have the buy point, the money should be inflow. If it's outflow, better wait and see. So money inflow, first red circle, the following day close price already higher than the high of the first red circle candle. So buy. So keep holding. So we have the yellow Tai Chi signal as the top escape signal, right? So if you see it for short-term trading, the following day you already can sell. So this is for short-term. And if you didn't sell the first white circle here, you also need to sell for short-term. And until now, it's still white circle. So we don't buy. We wait for another red circle, first red circle. If deviation expert tell us that money also flowing in, then we can buy again for short term. Success rate is very high, 87.4%. 4% success rate for these indicators, for these two indicators. Okay, and then just now that's the Singapore gold stock, and how about some US ones? So this one is Barrick Gold. Barrick Gold is we know that recently Warren Buffett has bought some stakes of this gold company, right? So if Warren Buffett also is buying, so maybe we also can try. But if you want to buy, you better make sure your buy point and is low as possible, and your sell point is as high as possible. How to find the proper entry and exit? Multicolor, red and white circle plus deviation expert. For example, here, this is the first red circle here. Corresponding candle, the high point is here. And this candle is the first day, the close price above the high of the first red circle candle. So this is the short-term buy point. Meanwhile, we check money already begin to flow in for several days, so buy. So after we buy, we keep holding until we have the sell point. After this short-term rally, this time a buy point again, but the price never really stand above the high of the first red circle candle. This day is above, but the third day it dropped below, means it's not successful. You better stop loss. I emphasize again, these software indicators are not 100% accuracy rate, but the accuracy rate is very high, 87.4%. If you are satisfied with that, you just follow the indicators strictly. You can avoid the big drops for short term. Can you see the very sharp drop? Because you never buy here, you never have to suffer this big correction. So the buy point here is not confirmed, because after that the close price also didn't stand above the high of the first red circle candle. So you never buy here. So you never buy, you never have to suffer here. And this time, finally, this is the candle when close price higher than the high of the first red circle candle. Buy and sell, still some profits. And then this time, buy and sell. No profit maybe, but the most important thing is you successfully avoided the big downward gap, this big sharp drop. And although currently we have another red circle, right? But the price never really stand above the high of the first red circle candle here. The following day open higher, but close lower than the high price of the first red circle candle. So this is not the real confirmation. We want to wait for the real confirmation. So no buy point yet until now. Okay, so this is how we can catch the opportunities for the gold stocks. So you can always monitor the performance of the US dollar index and gold. Usually they are opposite to each other. If the US dollar drop, then the gold will rise. If US dollar index rise, the gold drop. So after monitoring, you can find opportunity to do short-term buy and sell with the help of the red and white circle and deviation experts. So buy low and sell high, not that difficult if you got this combination of red and white circle and deviation expert. And how about another very famous US gold stock? It's called CMCL. Okay, so for this one, you see first red circle. This is the candle price successfully above the high of the first red circle candle. So buy for short term, catch the big rally, the very long green candle. So you sell for short term. Then buy again, sell again. This time, no profit or very limited one, but never mind. This time you have profit, right? This time you can make some profit. And what's more important is this time you didn't buy. Why? Because this is the first red circle. The following day close price is lower than the high of the first red circle candle. So no confirmation for this buy point here. So you never buy. If you never buy, you avoid a very sharp drop, this long bearish candle here. And then this buy points, you can buy here. After buy, you keep holding until you have the first white circle, you sell. So after you sell, can you see that the price is remain bearish until now? So with the help of red and white circle, of course, combined with our deviation expert, your success rate is actually very high. And it's not 100%, but it's very high. So the secrets for all the winners in stock market actually is very simple, which is you can always avoid the big losses, the sharp drops, and you can secure profits. And sometimes big profit, sometimes small profit, but you will never lose great sum of money. If you can make sure of that, you will be the market winner. Okay, so red and white circle and deviation expert can help you achieve such a goal. Okay, so finally, let's check some market hotspots. Firstly, we have the price for Apple already reached the $2 trillion US market capital. Okay, so this actually before we talk about the market hotspot, you still remember that last Friday when I talk about the market hotspot, I analyzed this Xiaomi. You still remember that it's 14th August Friday, right? So I mentioned at that moment that for Xiaomi, this is a buy point based on our strong signal and multicolor dragon and homely rainbow. This is a buy point. I mentioned that, right? You still remember? And then you see up until now, the price is it's already very high. Have you secured the profit here? Have you captured it? So for homely members, if you have watched my video last Friday, I'm sure you are at a profit now. All right. And if you are not yet homely member, maybe you don't have the software to monitor, so you don't have confidence. You feel not so safe, and I can understand. But if you want to become the winners in stock market in future, maybe you can consider to join Homely. Homely is the very professional stock training school. We have been in Singapore for more than 11 years. So if you're interested in our training courses, or you're interested in learning further about this Homely software, feel free to contact me. This is my WhatsApp and also my handphone number, which is 6592312307, and this is my email, amylay2017@gmail.com. Okay, and then we continue to talk about Apple, right? So for Apple, we have the market capital reached 2 trillion. That's big, but actually if you want to catch the opportunity, you see, you have the software to monitor. A very long time ago, I believe this is 2 weeks ago, roughly 2 weeks ago, you already have the strong signal buy point here, right? This is strong signal, red candle buy point, dark blue you keep holding, yellow sell point for short term, and if it's light blue, you stay sidelined, never touch, never buy. So after this buy point, roughly 2 weeks ago, so until now, you still keep holding. The indicator tell you keep holding, so you can catch the profit here. No matter the market capital reached what number, you can catch the opportunity here. Right? And why it can be so strong? Actually, you check multicolor dragon here, it tells you the reason behind, so that you can have more confidence to hold, to buy and hold. People feel like Apple is already high, so they lose confidence in this one. But if you check multicolor dragon, it tells you the big boys, which is the red bar, above 75%, it's quite stable for a very long time. Tell you this is the stock that is controlled by the big boys. If big boys take control, usually the price will keep going up all the time. Okay, so for short-term trading, you think it's high, you do short-term trading. You short-term buy and hold until now. So making profit is just this simple. Don't try to make it very complicated thing, stock investment. It can be very simple if you have the proper tool and the proper methods. Okay, and then secondly, we talk about the very sharp drop yesterday for Wilmar, right? So for Wilmar, yesterday it's a very big drop by more than 10%. That's a downward gap. And that's a downward gap. And why we have such a downward gap? If you search, you do some searching, and you will found some news talking about that it shrunk 10% because of the news that major shareholders, they plan to cut stake. So that's why the price dropped sharply, shrink. Okay. But even if you know the news, so that's not useful for you. It cannot help you, because you need to know exactly why, how you can avoid the big risks, how you can make profit, when to buy and when to sell Wilmar. This is what's important for you, what's valuable for you, right? So we're going to talk about this. Okay, so firstly, so how can we find off the sudden big drop yesterday? And secondly, will it continue dropping in future for Wilmar? Okay, so how do we know? Answer to these two questions. First question, about how to find off the sudden jump, right? Okay, so for short-term trading, if you buy at a very high position, you chase after the rally, of course you will lose a great sum. But if you buy at a relatively low position, let's say for example here, this is the after some sideways, the beginning of a rally. So if you check red and white circle, or you check strong signal, here I believe would be a buy signal. So after the downward gap, you saw it, so you can sell. So you can break even for this time. You don't have to lose money, right? So this is for short-term trading. And the other thing is, for Wilmar, we check multi-color dragon. Actually, the retailers has gone completely ever since here, right? The sideways area, after the price break up the white lines of homely rainbow here. So that's when the market reversed to long-term bullish, and we see retailers already gone, and big boys remain around 50%. You know that for this stock you can buy and hold for medium-term trading, because it got big boys take control, has no retailers. You can, it's also very low position, because it's just a long-term bullish reversal. So you buy, maybe when you see the price get support at the white rainbow lines, or you check some short-term buy and sell signal. So you buy and you keep holding until now. Even after this big jump here, you're still actually at the profit. You still can secure at least half of the profit you have made after you bought here. And it doesn't mean that in future for Wilmar the price must drop. Why? Because currently the price is at the very strong support of the yellow rainbow lines, right? So these yellow lines of homely rainbow are acting as very strong support for Wilmar. So if in future the price never drop below the last yellow line here, means in future it's possible that there would be another rally again. Of course, the downward gap here would be some resistance. So we need to wait and see whether or not the price can break up the resistance here of this downward gap, or it would drop below the support of the last yellow line. So how do we deal with it in future? In near future, if the price can rebound to cover the gap, and then maybe we still can hold. But if the price drop below the last yellow line, for medium-term trading, you need to sell. You need to sell for medium-term trading. And for short-term, of course, if you check the software, you after this, ever since this the price downward gap down open here, you already need to sell. If you have bought, I mentioned you have bought previously at a lower position based on the red and white circle or strong signal, you actually can break even. You don't lose much for this trading. Okay, so this is how we can deal with Wilmar, the big drop, and also how possible that in future it will continue dropping. I mentioned if it remain above the last yellow line, maybe it would not really drop sharply, but if it drop below, then higher probability that price would remain weak, maybe continue dropping, or maybe sideways below the yellow rainbow lines. So you need to check the yellow rainbow lines closely. Okay, so that's all about today's sharing. And if you like this video, you can give me a thumb up, and I'll be appreciate that very much. And if you also feel that this can help your friends, you can share my video with your friends and tell them to subscribe to my channel, right? And looking forward to seeing you in my next video. Bye bye.